Many thanks for joining us on the program this evening. I'm Temple Ashaju. Let's get down straight to business and bring you what we have in the news. First on the radar, the SEC, that's the Securities and Exchange Commission, is partnering the Federal Competition Council for protection of consumers' issues in Nigeria. And that says that President Muhammadu Buhari just signed the Federal Competition and Consumer Protection Act of 2019 into law. The act, which creates the FCCPC agency, is expected to commence the review of all mergers and other business combinations or arrangements for the avoidance of distortions to markets. Prior to the enactment of the FCCPC Act, mergers reviews, including notifications, were handled by the Securities and Exchange Commission. And in a statement jointly issued by the FCCPC and the SEC, both agencies of government now have agreed to work together for the continuation of commercial transactions and market operations. Nigerian Stock Exchange asking the broker-dealer community to collaborate in advancing the country's ranking in the ease of doing business. Let's listen to the Minister of Industry, Trade and Investment, Dr. Enola Machuku, as well as his team members, to what they have to say about this project.
So say all of us. We want a partnership between the government and the private sector that will be reflected on our stock exchange. We want our businesses to do well, and that's really at the heart of the role of the Presidential Enabling Business Environment Council, which is primarily to support you, our businesses, to prosper. Because when you prosper, Nigeria prospers. And when Nigeria prospers, we create employment for our people, and all kinds of good things follow from there. So we look at this partnership as extremely important. And therefore, what we're doing here today is not only symbolic, but it's very significant.
Now, the Presidential Enabling Business Environment Council has been working for the last 3 years to make Nigeria a progressively easier place to do business. It's a journey, so we're not there yet, but we're thankful for the support that we received from Nigerian Stock Exchange, particularly with legislations like the New Companies and Allied Matters Act that will be signed into law by Mr. President very soon. The importance of this is that in 29 years, the legislation hasn't been overhauled, but coming together with the Stock Exchange, SEC, Corporate Affairs Commission, all sorts of stakeholders, Section of Business Law, Nigerian Bar Association, to work together, collaboration does work. And we're now extending that further to deepen our partnership with Nigerian Stock Exchange. That's why we're here today. The National Action Plan 4.0, the fourth that we've had since 2016, has finished today at 63%, even in an election year. And this is because we've been committed to working with ministries, departments, and agencies and state governments, particularly Lagos and Kano State.
I don't really need to say much because a lot of things that we are doing in the capital market, we are doing it in partnership with you. We talk about the e-dividend, issue that we are doing to ensure that investors' confidence is really boosted in that direction. We talk about the multiple subscription. After the 2008, remember, there were a lot of multiple subscription that is causing a lot of problems in respect of unclaimed dividends and also causing illiquidity in the market. And we are doing everything to ensure that the owners of these shares come forward and claim them, and therefore boost liquidity in the market and also reduce unclaimed dividends. And in the same vein, also ensure that there's confidence in the market.
All of these efforts basically are all geared towards moving this country forward, with the idea that if the country works, we all benefit. We all be richer. And that's basically what it's all about. If this country works, those who are rich, they will be richer. Those who are poor will be lifted out of poverty. And that's the whole thrust of PEBEC, and the mission here, of course, is to solicit the support of the capital market, of the Nigerian Stock Exchange, and so on, to the effort that Dr. Oduwole is spearheading to move up Nigeria, to make Nigeria an easier place to do business.
And the shareholders of Central Securities Clearing System, CSCS, tradable on the NASD OTC Securities Exchange, this week successfully approved the CSD's 2018 financial statements. Now, the approval was given at the 25th Annual General Meeting of the Market Depository. And while addressing investors' concerns around the listing of the platform, the chairman of CSCS, which is Mr. Oscar Onyema, now notes that listing is not out of consideration.
We will continue to work. As you know, we intend to be the most respected CSD, across the globe. And anything that will support that, definitely we will do. And if listing, will support that and support corporate strategy, it is something that definitely we'll look at. And the average time of staying listed on the exchange is about 21 years. If you compare it with even the New York Stock Exchange is 10 years. I'm just trying to explain to you that in the life of an exchange, companies listing and delisting is part of life. It's nothing. We have to continue to do a good job to retain companies and allow them to extract good value. But should a company merge and choose to delist, there's really nothing you can do. Should a company decide that their interests are best served as a private company, there's nothing you can do. And then some companies are so bad as listed companies that the exchange says, we have to protect our shareholders, please go somewhere else. So those are some of the reasons. Your comments about quarterly reports will be, we think that we want to be sure that we've addressed a number of pressing issues before we get to that stage where we're now in a position to do that. But it's a good comment, and we will continue to review that.
And of course, the securities market in any country is incomplete without the discount houses. Now, post the annual meeting of FSDH Merchant Bank, we had this interview with the chief executive of the financial institutions, that's Mrs. Hamda Amba, who tells us about the major drags to investment in this climb, and of course, what operators will really like to see in terms of catalysts.
2018 was quite challenging. And as you say, not just for FSDH, for the economy at large. I think one of the areas that really helped us was where we really focused on the quality of our assets, and we focused on trading opportunities, exploiting every opportunity. Perhaps because of our past as a discount house, we understand that, yes, we are a bank, but we're also trading is a significant activity for us, and we made sure we exploited every opportunity. Another thing that was of particular benefit to us was our relatively conservative approach to things. In the previous financial year, I'm not talking 2018 now, 2017, there was a particularly a loan, a large syndicated loan of which we were part, that had some challenges in this market. And we had taken the precaution of taking a very conservative approach in terms of provisioning and other things, so that when in 2018, with the help of the regulator, the problem was somewhat resolved, we were able to take the benefit of the conservative posture we had in the previous year. We're able to unwind some of that, which came in as a benefit to us in the year that has just closed. So I think a combination of our trading activities and focusing on quality loans and the ability to resolve a rather difficult loan, all those came together to enable us to achieve the feat that we achieved.
So what for you were the major drags as an investment as an investment bank, and of course a discount house?
The major drag to any bank, I think, is the fact that we are not, the money we make is from the business that our clients do. So if my client is not doing business, how much money can I make? Or if my client is doing business but not at the levels that I had expected. So I am interested in the growth of the economy because the companies that we serve will do more business and will come to more to do more transactions with us. So where there was less of, we must accept that Nigeria for now is still a largely import-dependent nation. A situation where companies are importing less because the ones they imported before, they haven't even been able to sell it. The entire volume of activity is reducing. You see that it's not, you cannot grow the way that you would like to grow. So it's more a question of trying to get more business, getting a larger share of an existing cake, whereas the ideal situation is let the cake itself be even bigger and bigger. So we're hoping that with all the plans that we expect the government is going to come out with in 2019, that this recovery that has been somewhat fragile up till now will become stronger and stronger because all of us will benefit from it.
So as a top executive, what sort of catalysts would you want to see in the macro space and, of course, at the micro levels?
Well, while we've been here in this discussion today, first of all, I think I need to commend the authorities. I think one of the major positives we've had in this economy in recent times has been the introduction of this I&E window by the government, because I think initially there was concern that there would be negative results from it, and I guess it's natural for a government to be concerned. You want to improve things, not make things worse. But I think now everybody, those who are involved in taking that decision, are looking back with pride now that it is one of the things that has really been able to move this country forward. So I think the government, I would like to suggest that the government be emboldened by the outcome of this to tackle another very difficult issue. And that has to do with this question of oil subsidy. We've discussed it at length here during our post-AGM discussion, so I won't go further into it, but I understand it's not easy. I understand that there's fear that some people will be affected, and I think maybe the idea should be to have a safety net for those few people rather than have something that is so broad-brush that the richest billionaire in the land benefits from it perhaps even more than the individuals at the bottom of the food chain.
And now let's review the markets, the way they closed this week. We'll start as always with equities, where the stock market closed negative, with the all-share index slipping some 1.78% week on week to close at 29,212.00 points. Market capitalization dipped by about the same margin, losing some 198 billion naira this week. But the bearish sentiment was actually orchestrated by the losses across the cement sector, the banking segments, the personal care subsector of the market, and of course the food side of things, where you have the likes of Unilever, Nestle, and the likes. But if you take a look at the sectoral front, we've got the banking segment of the market dipping by 131 basis points. The consumer goods segment of the market, on account of losses around PZ, Nestle, and Dangote Sugar, was down some 29 basis points. Industrial goods segment of the market saw a 4.16% decline due to some sell-off on Dangote Cement, which was down some 3.69% this week. The insurance side of the market was positive, and of course the oil and gas was also quite positive, where we also had an improved activity level this week in the market. In terms of the unlisted securities market of this capital market, we had a decline of some 0.41%. We had 173.75 million units of shares traded this week. And of course, we had just 44 deals. 8 out of the 38 securities tradable on that platform was traded this week. Riggs Ventures PLC led the week in terms of volume and value of transactions, trading some 172 million units of its shares for a value of 163.99 million naira. And now, after the break, we'll come back to you with more analysis and take a look at what happened in April and, of course, outlook for the month of May. Welcome back to Capital Market Live here on Channels Television. Let's look at what the fixed income markets closed like this week. Of course, average fixed income yield closed the holiday shortened week flat at 13.65%. And of course, we had the yields at both the short and the long end of the curve closing flat. So that's remaining unchanged from the previous week. The Nigerian Treasury bills market average yield was flat at 12.98% as yield contraction in the 182-day to maturity bill offset expansions in the 91-day and, of course, the 364-day bills. Average yield in the bond market was flat at 14.32%, with notable movement in the 23rd of February 2028 security, which declined by some 16 basis points week on week, and of course July 2034, which had an expansion of 15 basis points. That's for the bond side of things. We had an auction of an NCB auction of 109.7 billion naira this week in any case. But for yesterday, if you take a look at bonds, we had some 20 deals in total yesterday for a value of 4.05 billion naira. And for the treasury bill side of the markets, we had just a total of 248 number of deals, and that's valued at 87.47 billion naira, way below 100 billion naira, which is the regular. Well, in April, the market lost some 713 billion naira to sell-offs on bellwethers, medium, and small cap stocks in the market. So why did this fall happen in the market? Let's hear from Adewale Adedeji, who is a research analyst with Ancoria Asset Management, the very first time on Channels Television's Capital Markets. Good evening and welcome to the program.
Good evening.
Thank you very much for coming through. So let's look at the reason why we actually saw equities, draining some 713 billion naira in the month of April. We saw the all-share index cutting down from 30,000 psychological line to 29,000, and then it went back to 29,000. That's the way it ended the month of April.
So thank you. The month of April could be regarded as one of the worst performing months for the equity markets in this year. You could see what happened in January, just as a reduction by just 3%, circa 3%. February went up, March went down again, and in April it lost minus 6%. It was minus 6% return on the total equity market for Nigeria equity market.
Mm-hmm. In terms of month to date now.
Yeah,
right?
month to date,
okay.
month-to-month returns.
Okay.
And for year to date, as at the end of April, was around 7% year to date. And this is driven by a lot of all sectors were in red, or we could say that there's red blood in the markets in April. The industrial goods fell significantly by 12% year to date. The consumer goods fell by 10%, circa 10%. The oil and gas fell by 7%. And for banking and insurance sector, fell by 4.3 and 4.1% year to date in April. And something interesting is to look at the fact that foreign portfolio investments increased Q1, and we see some foreign investments in April as well. But this foreign investment didn't actually go into the equity market. We see most of the participation in the fixed income markets, and that's why we see a lot of the treasury bill premium and the bond
rates
premium
are really high on that side of the
exactly,
market.
and the subscription rate is always high. So, and the reports released by NSC for Q1 about the foreign portfolio participation, it shows that there's a significant decline in the foreign inflow, and the outflow is actually the proportionate. There's a more than proportionate difference between the outflow and the inflow recorded in Q1 2019. Apart from the foreign portfolio investment, we've seen reports, corporate earning, a lot of investors punishing companies that failed to deliver impressive earnings for Q1. Dangote Cement fell revenue profit after tax fell by 16%, and the day they released the report, we saw the stock price falling to around 30%, and this actually impacted the industrial sector, and makes it one of the worst performing sector in April. Apart from that, we've seen in the consumer goods sector, which was second decline rate. Consumer goods sector, what we see in the breweries subsector is like all brewery stocks are on the low,
international
breweries, Nigeria breweries, Guinness, Champion, every one of like 38%, 20% return year to date. And this is due to the fact that the government introduced a new levy for the brewery subsector, which will impact their cost of production. They initially passed that cost on the price of brewery products. However, they can't sustain it because the market is not really, the aggregate demand is not really strong to take that.
So what can they really do to get out of that risk?
The risk. One of the things we are looking at is the fact that they are passing the budget and there's an increase in minimum wage. And one of the reasons
so that
why...
will make people to drink more, is that?
Exactly. One of the reasons why we see some decline in the revenue of the brewery subsector, the brewery industry, is that during the recession, after we left the recession, a lot of companies, a lot of states couldn't pay salaries to their workers, and led to a lot of people not even taking wine, beers again. So it's when they increase the minimum wage, we expect some demand to increase in the brewery space and in the consumer goods space, and this will impact on their profitability and top and bottom line of this sector. And the fact that the sector is actually very competitive, couldn't actually enable them to say they want to increase price or change price anyhow. So
the space in there is actually getting choked
for
these guys. Okay, especially with the introduction of AB InBev's products.
The big merger that happened.
Great. So let's look at, we already understand the factors that limited the growth of equities, but then what shaped the fixed income side of the instruments, fixed income instruments?
So fixed income instruments, as earlier mentioned, there was significant inflow. Okay. And we still see
but that's for treasury bills more. And
we see the auctions, there was 2 auctions last month, and before we had one last week. This week, rather, there was 2 auctions, and we see these auctions being oversubscribed for the T-bills and even for the bond. The March bond was oversubscribed to. They introduced a new bond, 30-year bond, and it was significantly subscribed to. And it shows that the interest of people, interest of investors, especially foreign investors, are in the primary market. For the secondary markets, treasury bills, we've seen treasury bills closing on a bullish note on a week-on-week basis. And despite the fact that there was sometimes that the system liquidity could shrink, yet the treasury bills still strive to close on a bearish note on a week-on-week basis. For the bond was quite quiet, and it has a mixed move due to the fact that people are expecting the auction and they don't know.
So everybody was basically brazen up.
Exactly.
But then just a few words from you now. What's the month of May going to look like?
Interestingly, May is always a period when globally there's always a sell-off. But we don't really see a sell-off globally, in the global space, because April was good for most equity markets outside the country, apart from Nigeria. And
so perhaps the appointments of new cabinet members under this administration, and of course the passage of the assent into 2019 budget will be the basic factors or drivers that will shape the markets in May, right?
And however, we didn't actually see much change for the equity market, except the foreign investors are ready to come.
The FPIs. So the domestic participation has really reduced.
Compared to last year.
Okay, I understand we actually need to wrap up now, but thank you very much for coming through on the program. Adewale Adedeji is actually a research analyst with Ankoria Asset Management. Thank you for being a part of the program this evening. We appreciate your time. I'm Temple Ashaju. I'll see you next time. Bye for now.